بسم الله الرحمن الرحيم. With you, Dr. adel, hussien. We will complete our course. Our course title, Environmental Accounting. Environmental accounting contains from 4 chapters. We will explain these chapters as follows. Chapter 1, Accounting for Sustainable Development. Chapter 2, Nature of Environmental Accounting. Chapter 3, Measurement of Environmental Costs. Chapter 4, Disclose Social and Environmental Performance. Now we will start Chapter 1. Accounting for Sustainable Development. We should know the definition of sustainable development. Sustainability accounting, also known as social accounting, social and environmental accounting, corporate social reporting, corporate social responsibility reporting, or non-financial reporting. This branch of accounting was originated about 20 years ago and is considered a subcategory of financial accounting that mainly focus on the disclosure of non-financial information about firms' performance to external stakeholders such as capital holders, creditors, and other authorities. So this branch of accounting mainly focus on how to disclose about non-financial information beside financial information. Sustainability accounting represents the activities that have a direct impact on society, environment, and economic performance of an organization. Sustainability accounting, in according to managerial accounting, is used for internal decision making and the creation of new policies that will have an effect on organizations' performance at economic, ecological, and social, known as triple bottom line or triple B's: people, planet, profit. So sustainability accounting mainly represents the activities that have a direct impact on number 1, society, number 2, environment, number 3, economic performance of an organization. In accordance with managerial accounting, it mainly focuses on how to help decision makers in their decision making. So sustainability accounting in managerial accounting is used for internal decision making and the creation of new policies that will have an effect on organizations' performance in 3 subcategories: economic, ecological, and social. It is mainly known as triple bottom or triple P's: people, planet, profit, level. Sustainability accounting is often used to generate value creation within an organization. Sustainability accounting is a tool used by organizations to become more sustainable. The most known widely used measurements are corporate sustainability reporting and triple bottom line accounting. These recognize the role of financial information and shows how traditional accounting is extended by improving transparency and accountability by reporting. Sustainability accounting is often used to generate value creation within an organization, may be used as a tool to make our organization more sustainable. Corporate social responsibility of account of organization now become more important. So these recognize the role of financial information and shows how traditional accounting is extended by improving transparency and accountability by reporting. Global Reporting Initiative. As a result of triple bottom level reporting, and in order to render and guarantee consistency in social and environmental information, the GRI Global Reporting Initiatives was established. The GRI was established with the goal to provide guidelines to organizations reporting on sustainability. In some countries, guidelines were developed to complement the GRI. The Global Reporting Initiatives states that reporting on economic, environmental, and social performance by all organizations is a routine and comparable as financial reporting. So, GRI is a method for representing non-financial information about an organization. Now, what is the dimensions of sustainability? Sustainability accounting has increased in popularity in the last couple of decades. Many companies are adopting new methods and techniques in their financial disclosures and are providing information about the core activities and the impact that these have on environment. As a result of this, stakeholders, suppliers, and governmental institutions want a better understanding of how companies manage their resources to achieve their goals to accomplish sustainable development. How the companies combine between economic performance and maintenance of environment. According to common definitions, there are three key dimensions of sustainability. Every dimension focuses on different subsets. Now, the dimensions of sustainability are environmental factors, social, economic. Environmental factors are energy, water, greenhouse gases, emissions, recycling, and packaging. Social contains community, investment, working conditions, human rights and fair trade, public policy, diversity, safety. Dimension number 3, economic, contains accountability, transparency, corporate governance, financial performance, economic performance, stakeholder value. So there are three key dimensions of sustainability are environmental factors, social, economic. Sustainability accounting connects the company's strategies from a sustainable framework by disclosing information on the three-dimensional levels: environment, and economical and social impacts, it is difficult to put together policies that promote environmental, economic, and social goals. So, sustainability accounting helps companies by disclosing information on three-dimensional level. Dimension number one, environment. Dimension number two, economic. Dimension number three, social. It's difficult to put together policies that promote environmental, economic, and social goals. This trend has encouraged companies to not only emphasize on creation the value, but also risk mitigation that are linked to the environmental and social subset of sustainable development. So now companies not only emphasize on economic performance, but it must have in its consideration the environmental and social dimension. Reporting formats. According to reporting formats, all of us know that financial information, it has an established framework of reporting. It is financial reports. According to non-financial information, there isn't an established framework of reporting. The content of company's report can be largely determined by factors and reporting standard guidelines and regulations. This trend offers company a greater flexibility than financial statements. Financial statements has a format according to international accounting standard. There isn't an established framework according to non-financial information and sustainability development and accounting for sustainable. An effective report delivers information aligned to company's overall objectives and engage with the audience in a manner that promotes the exchange ideas and communication. There are several ways and mechanisms of reporting, such as assurance statements, environmental, social and economic performance reports that have been noted. Some of these reports include shorter and more concise reports. Some companies are including in their reports a combination of hard copies and online resources, as well as a downloadable PDF files. Some examples can be found at the GRI, Global Reporting Initiatives, which is the most popular framework for companies that are looking for help and assistance in how to create their sustainability report as the trend to produce sustainability reports increases. So, to do the guidelines and frameworks to report on the social environmental information. Frameworks for preparing and publishing sustainability reports. Sustainability accounting continues to develop. Companies continue to gain understanding of the necessity of reporting frameworks, standards, and guidelines that may affect the form and content of their reports. There are several organizations that offer services to companies that want to change their traditional financial statement disclosures for sustainability reporting. In most countries around the world, there are currently no governmental requirements for companies to prepare and publish sustainability reports. Companies that have started to adopt this new method of reporting have faced new challenges in reporting due to the lack of experience. The Global Reporting Initiatives and OECD and UNCSD, United Nations Commission on Sustainable Development, are some of the main actors in developing a policy framework that better integrates the three-dimensional level of sustainability by decoupling economic growth from environmental pressures. Global Reporting Initiative is a multi-stakeholder organization that is committed to developing and maintaining the sustainability reporting guidelines. The goal is the continuous improvement of sustainability reporting, a protocol that approaches the applications level global reporting initiatives. Number 2, UNCD, United Nations, focuses only on the environmental dimension of the sustainability accounting. OECD, the Organization for Economic Cooperation and Development, focuses only in two frameworks: the analytical framework and accounting framework. According to analytical framework for preparing and publishing sustainability reports, analytical frameworks link information from different areas. Various types of frameworks are being used nowadays depending on the purpose of measurement. These frameworks seek to integrate the economic, environmental, and social dimensions of sustainable development. 2. Have sound foundation and to maintain key information needed to improve sustainable development measurements. Clarify relationships between different indicators and policies. There is analytical framework and accounting framework. Accounting frameworks. The accounting frameworks seek to quantify information in the three dimensions of sustainability accounting. The accounting structure imposes a more systematic approach that is not too flexible in comparison to the standards and frameworks that offer the Global Reporting Initiative and the Organization of Economic Cooperation and Development, among others. Accounting for sustainability therefore requires an extension of its standard framework. Specific techniques to measure information in sustainability accounting include: Number 1, the inventory approach focuses on the different categories of natural capital and their consumption and enhancement. This approach identifies, records, monitors, and their reports on these different categories. Number 2, the sustainable cost approach. This amount represents how much it would cost an organization to return the biosphere to its natural state at the beginning of the accounting period. Number 3, the resource flow input-output approach. It focuses on resources used to provide transparency. This approach concentrates on the resources flowing into and out of the organization to pinpoint potential areas of improvement. There are 3 techniques. Companies can use it to measure information in sustainability accounting. There are the inventory approach, sustainable cost approach, the resource flow input-output approach. Motivations and benefits from practicing sustainability accounting. There are 6 main motivations for practicing sustainability accounting. There are greenwashing, industry pressure, legislative pressure, stakeholder pressure, and ensuring the license to operate, self-regulation, corporate responsibility and ethical reasons, managing the business case for sustainability. It is a motivations and benefits for practicing sustainability accounting. Some researchers add that another motivation is to assist in decision making. They state that making decisions solely based on financial information is superficial at best. They add that there are certain business areas that financial data can't evaluate, such as customer satisfaction, organizational learning, and product quality. They propose that a mix of financial and non-financial information can help make well-informed decisions. So, not concentrate only on the economic performance, but you should take the non-financial information in your account when making any decision. Now, shareholders say that they want to see more sustainability reporting because it translates to increased corporate financial performance. This is because sustainability requires a long-term vision which is reflected in strategic planning. Companies that place emphasis on sustainability practices have higher financial performance as measured by profit before taxation, return on assets, and cash flow from operation than their counterparts. After finishing this chapter, we will try to solve these questions or choose the correct answer. Number 1, known as social accounting, social and environmental accounting, corporate social reporting, corporate social responsibility reporting, or non-financial reporting. The choices are A. Financial accounting, B. Managerial accounting, C. Cost accounting, D. Sustainability accounting. The correct answer is sustainability accounting. Number 2 is considered a subcategory of financial accounting that focuses on the disclosure of non-financial information about firms' performance to external stakeholders such as capital holders, and creditors and other authorities. Choices are A. Tax accounting, B. Managerial accounting, C. Cost accounting, D. Sustainability accounting. The correct answer is sustainability accounting. Three, sustainability accounting in space is used for internal decision making and the creation of new policies that will have an effect on the organization's performance at economic, ecological, and social. The choices are A. Financial accounting, B. Managerial accounting, C. Cost accounting, D. Sustainability accounting. The correct answer is managerial accounting. We can use sustainability accounting in a managerial accounting with respect to decision making and the creation of new policies. Question number 4. Sustainability accounting represents the activities that have a direct impact on space performance of an organization. Choice A. Society, B. Environment, C. Economic, D. All of the above. Sustainability accounting have a direct impact on all of the above. So the correct answer is D. All of the above. Question 5. The space states that reporting on economic, environmental, and social performance by all organizations is as routine and comparable as financial reporting. A. Global Reporting Initiative, B. Corporate Social Responsibility, C. Choice A plus B, D. None of the above. So the correct answer is Global Reporting Initiative. Question 6. Sustainability accounting encouraged companies to emphasize on A. Creation of value, B. Risk mitigation, C. A plus B, D. None of the above. Sustainability accounting encouraged companies to creation of value plus risk mitigation. So the correct answer is A plus B. 7. Question number 7. Space offers published material lead organizations through the reporting process with the main idea of becoming more sustainable in their practices in everyday business. A. Global Reporting Initiative, B. Corporate Social Responsibility, C. UNCSD, D. OECD. The correct answer is Global Reporting Initiative. 8. Space focuses only on the environmental dimension of the sustainability accounting. A. UNCSD, B. CSR, C. GRI, D. OECD. The correct answer is United Nations. Question 9. Space, the most popular framework for companies that are looking for help and assistance in how to create their sustainability report. United Nations, B. CSR, C. GRI, D. OECD. The correct answer is GRI, Global Reporting Initiative. Question number 10. Space focuses only in two frameworks, the analytical framework and accounting framework. Choice A, United Nations, B. CSR, C. GRI, D. OECD. The correct answer exactly the Organization for Economic Cooperation and Development, OECD. Space frameworks link information from different areas, integrate the economic, environmental, and social dimensions of sustainable development. This framework is A. UNCSD, B. CSR, C. Accounting framework, D. Analytical framework. Exactly, the correct answer is analytical. Space frameworks seek to quantify information in the three dimensions of sustainability accounting. A. UNCSD, B. CSR, C. Accounting framework, D. Analytical framework. The correct answer, accounting framework, exactly. Space identifies, records, monitors, and then reports on these different categories. These categories are analyzed according to specific classifications, including critical, renewable, substitutable, non-renewable, non-substitutable, and renewable natural capital. A. Resources flow input output approach, B. Inventory approach, C. Sustainable cost approach, D. None of the above. The correct answer is inventory approach. Inventory approach focuses on how to identify and record and monitors and then reports on these different categories. Space represents how much it would cost an organization to return the biosphere to its natural state at the beginning of the accounting period. A. Resource flow / input output approach, B. Inventory approach, C. Sustainable cost approach, D. None of the above. The correct answer is C. Sustainable cost approach. Question number 15. Space focuses on resources used to provide transparency. A. Resource flow input output approach, B. Inventory approach, C. Sustainable cost approach, D. None of the above. The correct answer is exactly A. Resource flow input output approach. So we finished chapter 1. See you in the next session. Goodbye.